What is good investing all about? I'll give you two options here. Is it about making the money, or is it about protecting what you've got? I've already got a couple of responses there. Okay, let's do a survey, and you can only answer once, and I want to see all hands go up at least once. How many people think number one's the most important? You've got to make the money. Oh, I reckon that's probably 2/3. How many people think you've got to protect what you've got? I reckon about 50-50, and the lady's put her hand up for each one. So she thinks they're equally important, I guess, and in many ways they are, aren't they? But for me personally, you know the one I think that's most important? I think that's most important. And I think most investors only think about number one, don't they? Most investors go into the market thinking it's some giant big pool of money that they're going to fall face into, and they're going to have untold wealth in there because it can't be too hard. I mean, how hard can it be? You just buy a bunch of blue chip stocks, hold on to them, and they go up in the long run, don't they? Yet we've seen that the market goes up in the long run, but in the long run it also goes down a few times, doesn't it? Hey, what do you think is more plausible? The market goes up in the long run, or the market goes up and down in the long run? Nobody tells you that, do they? Okay? See, people want to make as much money as possible in the shortest space of time, and they forget number two, isn't it? There is a relationship between risk and reward. Now, let's talk about this relationship. If you want more of this thing on the top here, what do you need to do with this? You need to take more risk, don't you? Yep. If you want less risk, what do you need to accept of that? Less reward, isn't it? So we know that relationship. Now, the importance of protecting what you've got can be summed up in really just one little analogy. If you lose 50% of your capital, you need to make 100% of what you've got left to get back to just break even, isn't it? How easy is it for you to make 100% on your capital? How easy is it to lose 50%? Very easy. Yet most people, and we saw just in that response, most people think about making the money and they don't think about protecting what they've got. Okay? We're going to do a lot of talking this morning about protecting what you've got. Another thing I want to talk about before I move on from this slide is an equally important relationship up there, which I think also most investors take for granted. And it's this idea of effort and reward. The relationship's very similar. If we want more reward, what do we need to do with this? We need to put more effort in. Absolutely. And that's not just with your investing, that's with anything you do with life, isn't it? If you want more reward, you need to put in more effort. If you want to have less effort, what do you need to accept up here? Less reward, isn't it? Okay? I think a lot of people, again, they think things are easy. It's no problem. I'll be able to do this myself. And before they know it, they're in over their head and they've lost too much. That makes it hard for them to make money, isn't it? Okay. This brings me to this definition of two types of investors. Okay, and I think most people in the room are going to fall into one of those two categories. Winning investors make money in a bull market. Now I should tell you, a bull market is the market that goes up, isn't it? Yep. Now, remind me, in a bull market, who makes money? Everybody makes money. So there's nothing special about winning investors there. But where winning investors really prove their worth is that they also make money in a bear market. And what's the bear market? The one that goes down. Are we in a bear market right now? Oh, that's interesting. Okay, I'm feeling another survey coming along. Okay, I'll give you 3 responses. Please only answer once. You're going to answer, Carl, I'm a bull. I think, you know what, this is just a correction and the market's going to be up. It's going to be much higher than this in, say, the next year or two. Carl, no, I'm a bear. I reckon this GFC 2, it's just started, and I reckon in 18 months' time we're going to be down at lows again. Or Carl, I've got no idea. I've got no idea. I'm just going to stick my head in the sand and just, really hope for the best on this one. Sorry, no idea. Okay, who are my bulls? Let's go 18 months. My bulls? Not bad, few bulls. My bears? Probably just as many. I've got no idea. Most people. Okay. Most people have got no idea. And that's the response I kind of get more often than not. So we've got the bulls, we've got the bears. Do you know what I call the third group? The third group. The ones with their head in the sand, just hoping for the best, it's all going to blow over. I call them the ostriches. Yeah, I call that group the ostriches. The bulls, the bears, and the ostriches. Very interesting. We'll talk a bit about that later on. Okay, so that's winning investors. They make money in both types of markets. Losing investors, they make money in the bull market. Hey, everybody does. But unfortunately, they give a great deal of that back in the bear market, which is a real shame. Okay, I want everybody in this room to get into that first group today. Okay, I'm going to do my best to get every single person in this room into that group of winning investors. To do that, I need to show you how to do two things. I need to show you how to understand how to protect what you've got. That was number 2 on that last slide, isn't it? Protect what you've got. Then I need to show you how to profit from a falling market. And if you can protect what you've got so that when the top of the market comes suddenly, by the way, does it come suddenly or does everybody get to know about it first? Yes, it's very sudden. You don't see it coming. So you need to be able to protect what you've got when that happens. So you keep your losses very small. You don't lose 50% of your capital. Okay? I'm going to give you a number on the next slide to try and keep your losses within. Okay? But once that market has turned from bull correction, what does it turn into after that? A bear market, doesn't it? Yeah. We need to then be able to profit from that falling market, that bear market. If you can get those two things right, you're going to be a winning investor. Okay, let's knock them off one by one.